right, there you go. We live. What's going on, peoples? It's your guy, Nate Bennett, co-host of the Extraordinary Exchange podcast. And y'all see I got some new guests on here.
What up?
Got my man, Adam Terrell, a.k.a. Benzino, a.k.a. Benz.
Another remix edition.
Another
Co-host style this time
edition.
around.
You see it. And in the top right or left-hand corner, however you want to look at it, in the Hollywood Square, we got another illustrious guest, another family member. She's been a day one supporter of everything we've done with the Extraordinary Investment Group. Benz and this young lady used to be on Clubhouse back when the pandemic was strong and we were all locked up. I was at work listening Monday through Friday, 9 to 11, soaking up all the game, talking about the stock market, options, technical analysis, fundamental analysis. We're going to get into all that tonight. But we have Miss Options Bae, a.k.a. Investing Bae, a.k.a. Miss Alaina Bradley with us tonight. What's going on, Alaina?
Thanks for having me.
Absolutely. Appreciate you being on. So, yeah, we'll just start there. If you could, share with the viewers, with the listeners, with the family, who you are, where you're from, and how you got into this crazy game called the stock market and investing.
Oh, yeah. For sure. So, I'm from East Tennessee, born and raised. I got into options with a lot of people, like right after the pandemic. Had no idea really what I was doing. So I got lucky like everyone else in 2020. And then I quit my job to do it full time. And that's really when I got my wake up call, like, okay, you got to get serious. If you're, you got to get consistent and really learn how to trade. And that's really when I learned, like, there's a lot of stuff I didn't know. So I always tell people I kind of quit prematurely, I believe, because I didn't know enough about myself. Even we were talking about that a little before this. But so then I really got serious about like technicals, the mental stuff. And then I started teaching. And Benz, I actually met Benz. And I don't even think we were in a stock room. I met him in a random room on Clubhouse. And then I woke up the next morning and saw him talking about stocks. And I was like, hey, I know him. And the rest was history. But yeah, I appreciate y'all having me.
Yeah, and when I saw it, like I said, when I saw on the schedule that you were the guest, I definitely wanted to come in because I saw the growth of you individually as a person, as a trader, and the ability to kind of take those skills that you learn from trading and build a business around it. I know kind of the premise of this whole entire endeavor that Nate envisioned is to bring people real actual things that they can apply to their lives and use to build their own. And I've watched you do it from the beginning, from, like I said, learning how to trade to take it into a business. So I think you got a lovely story that everybody needs to hear. And I'm happy to be a part of sharing it with everybody today.
Thank you.
Heck yeah. So yeah, get into the story. Like, what was the real inspiration? Like, so when you say, "Oh, I got into it like everyone else in 2020," not everybody got into it. Some people were, on a PPP loan scam type stuff. Some people was, what I'm saying. So it like, why?
But no, my story is kind of dark. I mean, it has a happy ending, obviously, but I was basically in like a really horrible relationship with, like, I don't want to go there, but it was not a good situation, right? And so as a result of that, I got domestic violence charges along with my ex. The laws in Tennessee are just not for women, which is a whole nother thing I'm working on helping with. But basically, when you have an assault charge on your record, like, you can't work at a gas station. You cannot work at McDonald's. Like, I was cleaning hotel rooms. I got a job at this storage place, and I was working there doing collections. The pandemic hit. So I'm over here like auctioning people's things off, which is like horrible for your mental health, right? So I was just not in a good spot mentally. Like, I really wasn't good after that situation. Like, I didn't want to go to work. I didn't want to be around people. So I was really depressed. And I saw a friend of mine from college posting options trades. And I was just like, huh. And so, of course, we got stimulus money. And I'm like, huh. So I was like, let me just see what this is about. And so my first trade ever I think it was a 450 AMC call. It was like $27. And the thing ran like over 1,000%. And I was just like, huh. Like, I was like, wait a minute. So I was like, I can do this. And so I started trading, and I started Options Bae actually on Instagram. And the whole idea behind that was like, it was my trading journal. Like I was just kind of sharing with people as I learned, because I didn't know what I was doing. I was still learning. And then of course with Clubhouse and even like Ben's and Just, like I feel like y'all were pivotal in just me like meeting other traders. Because y'all really helped me, like y'all gave me a platform. I'll never forget it. But yeah, it just kind of snowballed from there. I know like Bloomberg had hit us up, and I thought they were scammers. Like, and yeah, it just kind of snowballed from there. People just started gravitating to us, and it's just been up and up from there. It's really fun.
And that's kind of the beauty of the story. Like I say, for me, is it's a myth for some people that you can just quit your job and make a living trading.
Mm-hmm.
Some people feel like it's. I've heard of it before. I wanted to actually bring somebody, real life, who I've observed do that. Like you say, lose your job, go through some serious situations where you had to figure something out,
Yeah.
and really found a real vessel to do so through trading. I think it's a beautiful story. So I love it.
Yeah, a lot of people, like, even if you didn't go through my situation, which I have students that have been in my exact situation and we bond on that, but a lot of people can relate to just not liking their boss, not liking their job, not making enough money to be comfortable. Like trading, I think that's a misconception too. Like when you're trading, it's not, everybody doesn't have to be, balling out of control, living a rock star lifestyle. You can trade and supplement your income and make enough money to live on without being a gajillionaire. So I love it. I love it for that.
That's what we see on social media. We see everybody highlights. They, went and rented the Lambo, and they got the Lambo out there, and they trying to sell a course or so. Yeah, Ben, shout out to you. Shout out to Just. I was actually late to the Clubhouse because I'm an Android user, so I would hear, I would hear like, hey, they doing this on Clubhouse, and all the fellas in the investment group who are Apple users, they were on there. But from the day Android users got access, I went on there and I was like, dang, this is dope. Like what y'all had going on. And it was beautiful. Like I said, it was regular everyday people. Sometimes you'd have like some bosses in there too, the Bloomberg article and all that. So yeah, it was dope. And just allowing you to peel back the onion a little bit and share, be vulnerable with exactly where you at mentally. That's even more commendable. So
just another good reason for you to get on Team iPhone. But anyway, what I will say is that I think the essence of that was just a good space for people to come together and an open forum to speak and have conversations, kind of like we're doing right now, to share opinions, share ideas, and move thought forward. And I would love to recreate that again and again as much as we can moving forward. So. Who knows what the future holds, but definitely we'd have more open spaces and round tables for like-minded folks to get together. Conversation.
Yeah, it'll happen. And me and Alaina was just talking before we got on here. The two main words that keep coming up with me personally, I mean, I'm sure a lot of people in the group too, is building and community. And building community. Like, you see the people that I'm trying to connect with and collaborate with, Ben's, and we get like, I didn't even know that was on your spirit to want to recreate that. But yeah, we can definitely do that going forward.
For sure. Like everything great comes through working together, teamwork, building. That's what we live off over here. And any way that we can implement that for everybody else to get along, I'm with it. So let's get
it. So real quick, Alaina, you mentioned a trading journal. I want to talk about that. We'll start there first for folks just getting into trading. I know I had one. It was pivotal to my development as a new trader. Explain what a trading journal is, and then I want to pivot into a little bit of the psychology you were talking about.
So the trading journal, it's basically like, I think of it as a mirror, because a lot of times, like when you're trading and you're in the moment, it's like you're just reacting or acting. You might be emotional, whatever. But like basically a journal is where you track all your trades, like your entries, your exits. I even have my students track their emotional state. Just because like a lot of times when you have mistakes, you might not realize you're making them if you don't see them in your face, like on paper. So we like to track everyone's trades and just see like, where are you making mistakes at? Are there any patterns here? Is there a time of day that you're slipping or whatever it is? Then it just helps you be accountable. It helps you improve. I think it's important.
So let me ask you this. What differences did you see as you started documenting your trades? Like, what are you looking for specifically when you document your trades, and how do you use that to improve?
So for me, one of my biggest struggles as a trader was like having a bias. Like I was always in the news, just so I could be hip to what's going on. But then I developed like this bearish bias. And so I was going through my journal. I was like, dang, I'm only playing the downside. Like, what's up? Like I'm limiting my own profitability, you know? So that was one big thing I noticed. Another thing I noticed was that I was going in early in the day and like smacking the market, but then like I was taking on additional trades as the day developed, and I was giving it back. So I was like, why am I over trading? Little things like that. Another thing I noticed was that, well, I took a huge loss, but I was like over trading and I was over leveraging too. So I had to like slow down on that. But those are things that I really didn't realize I was doing until I actually looked at the paper and it was like in my face. And I was like, you know, all my afternoon trades are not, you know, they're not hitting like the morning trade. So I need to focus on trading in the morning when I'm stronger. So
it helps you get your tendencies together and look back. Yeah.
everybody has an edge. You just got to be aware of like where you're strong and take advantage.
Yeah, just like in sports, you go back and look at film. You know, what I'm saying? Like same thing. Look at film, and you were talking about watching the news and being a creature of following what was going on TV. That's when I'm watching sports now. Like I watch it on mute, just so I'm not influenced by, you know what I'm saying, that like the narratives and the media or the announcer, like that'll sway how you look at the game sometimes, whether it's football, basketball, whatever. I watch it on mute now. So, you know, I have my own perception of what's going on in there.
Yeah. Like I just really like the market has got me really into like human psychology, because I feel like it's like it really is hand in hand, and a lot of people don't really look at it that way.
But
it definitely is. Definitely is.
The psychology, like it's a whole. You can look at. Last time when I did my episode, we were talking about charting, and a lot of the patterns in charting really are psychological money patterns. The double top and all that. Like you can actually take those exact patterns of the way the mind looks at certain things, certain situations, and those chart patterns equal out perfectly to thought patterns, highs and lows, emotional highs and lows of trading. It's a whole science about that is definitely an edge that most people don't even necessarily look into. You understand it in yourself, but you don't realize that those same patterns that you exhibit are also exhibit in the market, and other traders doing the same thing. So if you learn how to see those, then you'll be able to take advantage of them.
Yeah, that's the scary part about trading too, is because like it's like a lot of people are like, you know, like 90% of retail traders fail, right? Like that's a real thing. Like a lot of people fail at this. And so it's almost like a herd mentality. Like everyone thinks the same, but then it's like everybody can be wrong. So like you really got to like learn how to think outside the box, because the market will eat you alive if your mind is not right.
100%.
Yeah. So go ahead, Ben. Last time we talked about fundamentals when we talked in our stock market 101 episode. So we want to look at the other side of it and talk technical analysis tonight a little bit. You explain for the novice, you know, your day one students, they just coming in, 10th grade Benz. We talked about 10th grade Benz in the last episode. That's when he started trading. You know, what is technical analysis and how can we use that to our advantage as traders?
Oh, so technical analysis, that's like the price action, the chart, the momentum, like what's happening in your face. And I guess for me personally, I think that's like the fun part. And it's also like the easiest part. That's why so many people like focus on the charting. It is important. But yeah, I think that sums it up. Just the price action, the candles.
So then for the next step up is, if that's the basics, what are some setups and things that you look for technically that you found through your time that you use personally that you prefer?
Yeah, I'm a momentum trader. Like, and a reason for that is, one, I have a really, really short attention span. So like I can't trade things that aren't on the move. Like, and I don't think anyone should, because we need direction anyway. But I like, of course, volume. We use RSI, MACD, of course. But really just price action. Like I can really just trade off of candles and volume and maybe a couple moving averages. But yeah, I like to strip it down to the bare skivvies and just keep it simple.
basic charts, all those charts with too much stuff on it. I don't know how people do it.
It's not necessary.
I get confused myself looking at too many indicators. So I
Yeah.
definitely understand what you mean. Simple is simple, but to that process, it kind of what you were saying earlier about journaling is everybody has different hot zones that different things that they like, and to find those 2 or 3 that work for you over time is kind of the key to it. Would you have any suggestions about how somebody could look through those different, because it's a million different indicators out here?
Yeah.
How would somebody be able to find those that work for them personally?
Yeah, so I would say RSI MACD, like that's like your basic, like your Big Mac, you know, like it's just tried and true, whatever. So the only thing is like they're lagging indicators, but they really do kind of help you see momentum for what it is. So like, for example, if you look at RSI, right, relative strength index, it'll tell you if a stock is overbought or oversold. But the thing is, like, typically, you know, if it's over 70, most people consider that to be a sell signal because it's oversold, or sorry, overbought. Below 30, oversold. The thing with RSI is that it's really, the way we use it is more like a sentiment gauge. So like, you know, RSI can go above 70 and keep going up, right, to like 90. So like when we're in that overbought range, typically we're looking for like pullbacks and continuations and not reversals. Like we look for reversals when, you know, we're extended on higher time frames, things like that. It's the same for the downside. Like if we're below 30, like this morning, if we just kept dropping, that's bearish sentiment. So we're not looking for, you know, I heard someone say one time, like, you know, buy when the RSI is below 30 because that's support. And I'm like, no, it's not. That's just bearish sentiment. And so we should be looking at downside opportunities. Same with MACD. Like MACD, another momentum oscillator, but it's just like the candles tell the story, and then the RSI and the MACD, those are like your sides, like your side dishes. But yeah, I hope that makes sense.
Oh no, perfect. And one thing I want to point out though is you when you talk about buying based on RSI, a lot of things that we hear as beginner traders, we don't necessarily know if they apply to you because everybody's trading differently. Has different time frames, have different outcomes you're looking for. So if you're a longer term buy and hold buyer, then what you're looking at on a down MACD is different than if you're a momentum trader who says the sentiment is now low today at this current moment, and I'm trying to make a quick trade out of it. So one of those things that if for the newer people out there, I just want to make sure that they understand that these different tips that you get from whoever, make sure they're applicable to what you're trying to do in that moment, and the type what type of trade that you're trying to perform.
Yeah, I'm predominantly a scalper, so I'm like always speaking in scalping.
Get in, get out.
Yeah.
And again, that goes back to that trading psychology, knowing who you are, what kind of trader you are. Because again, a lot of people, like you said, Benz, will follow, you know, the top experts in a certain, you know, talking about certain things, and the way that they're trading isn't applicable to how you're trading and your psychology and what you're trying to get out of this thing. So yeah,
because like even watching CNBC or whatever, those guys are ETF creators that buy and hold for long periods of time. They can't really tell you what they're doing after they're doing it. But if you're a scalper, that information doesn't really help you out when they say, oh, I bought XYZ today. Just because that doesn't, you know, I mean, it may help you in a moment, but if you're really trying to perform what you're doing, that won't help you out. So just knowing that information and what that what the best use for that information is a key to all this in my book.
Yeah, you got to know your personality too, and I started off swing trading because I was working full time, so I was still swing trading. But now that I have more time and I can like look at the charts, it's actually interesting because I watch the charts more and I trade less. But I mean, I just like watching them. But yeah, my personality is way more suitable to scalping short term.
And then you're prepared for the opportunity. Like if you're watching those charts all the time, then you're prepared for the opportunity when it presents itself to execute.
Exactly.
All right, let's get into some more indicators. You talked about the MACD, the RSI. You mentioned support and resistance. Can you explain to the newbie what support and resistance is and how we can use that to our advantage as well?
Yeah, so support and resistance, they're basically levels on your chart where the price changes direction. So Support is like the floor, like where do we fall down to before we bounce to the upside? And then resistance is the ceiling. So it's like where do we raise to before we reject and come back down? And then you also have like psychological price levels. So if we're talking about like SPY, you have like 400, 390, like those whole numbers. They're treacherous. Okay, they're treacherous. Typically, if we're trading around those levels, I don't even worry about it. I set my alerts and go about my life. Just because it's usually like a dogfight between the bulls and bears on who's going to take the direction. And it can last days. Okay, so just don't even worry about it. The whole numbers, just be careful with those. But yeah, if you're in an uptrend, of course, your support is going to rise. Your resistance is going to rise. And then when you come back down, typically like old resistance will become support, and then you'll lower, like you'll just keep dropping lower, but you'll like revisit those same levels over and over. It's pretty cool.
And to throw back to our psychological conversation, those, like she said, those whole numbers. At the end of the day, it's humans mostly now. We got algorithms and things, but it's people that it's people. So if you're naturally attracted to those whole numbers, support and resistance becomes that way because buyers and sellers come to a certain point. Once you break through that old resistance and purchase that at a certain dollar point, then you're going to hold on until it comes back down to that point. So all those psychological things affect how everybody trades, and it also affects your charts and your price action, everything else on the stock itself. It's all psychological at the end of the day.
Yeah. Like Tesla back in the day used to be 1,000. Like when Tesla broke 1,000, it was like was partying. Yeah.
Right now it's SPY at 420.
Yeah.
420 is the number. And if you just watch that battle at 420 over the past month or two, it's you can see what's going on. So it's blatantly obvious. And 420, like I said, it's just a psychological number that everybody says, if I bought at this point, that's a good spot to sell. You know what I mean? Just psychologically speaking. And so it keeps going back and forth until you get that push over 420, and then eventually that'll become your new support at some point in time when they make a big move over there.
It's stressful. It's like I feel like every day I wake up, it's like 410, 420. But it's choppy there.
Yeah.
All right, we got moving averages. Again, those are the main indicators I use as well: RSI, MACD, and your moving averages. The different moving averages and how we use those.
Oh yeah, there's two different types that I've used. It's the simple and the exponential. And so basically with your simple moving average, it just smooths out the price action over like the last however many days. So like if you use like a 200, that's a popular one, or 50, that's a popular one. It just smooths out your price action over the last 50 days. And it applies equal weight to like all the days. And then you have your exponential moving average, which is the same vibe, but it applies more weight to the most recent price action. So it updates a little quicker. And so typically what you look for is like, where this is for me, I'll speak for myself, but typically what I like to do is I'll use like the exponentials for like shorter things, like shorter trades, short time frames, and then simple for your long things, because you want to smooth that all the way out.
So as a scalper, you brought up time frames. On your charts, what type of time frames do you chart on?
I would not go, for me, because I'll look for gaps anywhere. Like I'm here for the gaps, but typically I won't go above a 15-minute for anything. Like,
so that's very short term.
That's where I draw because I trade SPX, so it moves really fast.
Right.
So if I'm on a 15, I'll probably get slapped in the face. It reverses really, really fast. But yeah.
So SPX is your main trading vehicle now? That's what you do?
It is. I graduated from SPY, and SPX is like SPY 10x the SPY. So a little bit of leverage, a little bit of chaos, but I love it.
Futures and all that. Kind of explain that to the people. I think a lot of people don't understand the difference in those two things and how the trade may be different.
Yeah, so with futures, like I'm pretty sure there's no like puts, like you're shorting those.
Right.
And then like with options, you can still buy like an actual put. So it's like a different type of security. And you're even trading like a different type of asset, like tax-wise. So I think like futures too, they're more volatile. They trade at different times than the normal market. I have no idea. I don't even want to front. I have no idea about like futures taxes. That's like that's above me. But yeah, it's a little. I know SPX taxes are different than SPY.
Right.
I do know that, but that's about all I know on futures. I'm sorry.
Oh no, the trade is different. Like I said, and I got we have another guest to come on specifically about futures. When we talk about SPX, though, I do know there is a difference, like you say, with tax and things like that. So I didn't know if you had any SPY, any futures reference as well. I know they're all the different classes do have different tax implications.
Oh yeah. There's a lot of differences between like SPX and SPY though, like as far as trading options goes, like the settlement, like SPX settles in cash. I know one day I forgot to close a position and this was so dumb, but like I opened it up the next day and I just had cash in my account and I was like, okay, that's fine. Right. I'll take that. But like it doesn't have a dividend, like SPY has a dividend. SPX isn't really backed by anything. It's almost like a phantom ticker. So yeah, there's a couple differences there.
Dope. So you keep mentioning options. Ben's kind of explained what options were and the difference between them and how they're traded. Explain, why options as opposed to just your conventional ways of trading, and how why people gravitate toward options, because that's the thing that we hear often now.
I think, honestly, I think they're both important. And the reason I say that is because like when I came into the market, I started with options after the pandemic or whatever. And when I look back, I was like, okay, I've been trading options all year, but like, I'm looking back at these prices and I'm like, dang, like, why did I not just buy shares? Like I would have been in a better position for my long-term, but I think they are both important. So options are cool. And they really originally were made for like leveraging. So like you would invest in your shares and you would use options as a hedge against your shares should the market, tank or whatever. But they really are a good way to make money. You can make a lot of money really fast. We all know that. But there's a lot of moving parts to options that I don't think a lot of people think about. It's not
break it down.
Buying a call. Like you got the Greeks, you got like, time decay that can just throw your whole plans off. Like options lose value over time. So like the idea is to get in and out. It's almost like you're playing hot potato. Like you want it to gain value, but you want to throw it back. Like you don't want to hold on to it. Right. But no, you can make a lot of money. Like you really can. But yeah, there's just a lot of like moving parts. You got the Greeks, you have like, in the money versus out of the money. Like, I don't know. There's so many. I don't know.
Yeah, no. And again, as we're having this conversation, I'm thinking like, all right, is a new trader that's not visually looking at, because I'm a visual learner, and when I learned, trading on the Forex side, I was looking at charts and figuring what each and everything is. So I'm making sure as we're explaining it, someone that's new that may be looking at a chart can follow along with what we're saying. And we're making sense. Simple. So the Greeks, break down the Greeks.
Yeah. So you have delta, like that's your dollar amount. So like, let's just talk about Apple. Everybody knows Apple. So like, let's say Apple goes up $1, and your delta is 50 cents, then you'll make, 50 cents added onto that premium. And then of course you'll be closer to the money. So your delta will increase by the gamma, right? The gamma amount. So gamma, the easiest way to remember that is the gas. The gamma is the gas. So like, let's say your gamma is like 5. So like if we go up $1, you're going to make your $50 off your delta, and then your $5 extra will go on top of your delta. And now your delta is a 55. You're closer to the money. That's probably around right at the money. And then next you have your theta, like T for time. The options, I think of it as rent. Like the longer you hold it, you got to pay rent every night. Like you got to pay the market. Once you get around halftime before that expiration date, the theta will tick up on you. Like it'll start, the rent goes up a little faster. And so that time decay, you'll pay that every day that you're holding that premium. And let's say your delta is $30.30, then you're going to pay $30 to hold that contract overnight. It does count for holidays and weekends. Keep that in mind. And then you also have Vega, V for volatility. The way I explain this to my students is like volatility is like a balloon, right? Like when your volatility goes up, it inflates your premium like a balloon. It gets more expensive. So events like the Fed, FOMC, like earnings, investor meetings, elections, stuff like that is going to increase volatility across the board. But like if it's specific to your stock and a lot of people rush into it, then it's going to increase your premium. So it's a really good idea to have a ballpark idea of where your premium like normally sits. So for Apple, it's usually around 30 to 40% for Apple. And so if it's 50%, I know they have high volatility right now, right? So whatever your Vega is, that's going to be the amount your premium increases with a 1% increase in volatility. And then, of course, as the balloon inflates, once the volatility is gone, it will deflate, the IV crush, and your premium will get flat. That's what a lot of people experience at earnings. And then the last one is row. I don't have a cute rhyme for that because like we really don't care about row like that. But it's
I was
like,
waiting for it.
yeah, the
I didn't know we was gonna go there. I was like,
yeah, I can't think of one, but no, row is the sensitivity of your option to benchmark interest rates. So if the interest rates increase 1%, then your premium will increase by that amount. And honestly, SPX is the only stock I've ever traded that had a higher row. So if you trade anything else, you probably really don't care. To be honest, it's like less than a penny.
So let me ask you this:
Mm-hmm.
you talked about in the money, out of the money, went through the Greeks. You
Mm-hmm.
come to you come to the options chain. What are you looking for in a particular option that you find that to be a good place to look at?
Yeah.
And real quick, explain the options chain and then get to that.
Yeah, so the options chain is a list of like all the available options for a particular stock. And I want to say this, just because a stock has options doesn't mean you should trade them, because some options are designed, I don't know who designs them like that, but they're not for traders, right? They're not for us. So things you want to look for is like your bid ask spread. Make sure the numbers are close together. That'll ensure liquidity so you can get in your trade and get out of your trade with like most of your money. Also, the in the money versus out of the money. It depends on what you want to do with the trade. And this is one of those things where like it's important to have a trading plan, because where you go on the options chain is going to be depending on what your strategy, what your plan is for the trade. So if you're someone who's like day trading, scalping, then you can get away with things that swing traders can't get away with on the options chain, right? So like if I'm day trading, scalping, I can go out of the money. I can buy those super cheap premiums, but I know that I'm not going to be there long. So that high time decay, that high theta out the money is not going to affect me like that, because I'm not planning on writing it out to the opposite direction or holding it overnight. You'll have a lower delta, of course, when you're out of the money. But if you're buying multiple contracts and you just catch the momentum, that's all you need, right? And then when you go in the money, and I'm not saying like, Nancy Pelosi deep in the money, but like you just go a couple strikes in the money. That's better for swing trading, because you're going to have a higher delta, you're going to have a lower theta. And then as a swing trader, of course, you're going to have to ride out some reverse price action, because that's the name of the game. You're focused on bigger moves. So those are more suitable for swing traders. And then when you're talking about like leaps and things, and you go real deep in the money, and that's not even a conversation you want to have if you don't have a lot of capital, because those things have to marinate. They have to be cooking for a while. They do pay. They have really high volatility, so that your premium will stay nice and big. You can get a maxed out delta, so you're making a lot of money on the price moves, not getting killed on the reversals. It just takes capital. And so like, I think of what a lot of people do is like they'll get in a contract and they'll switch up the format, the trading plan. So it's like they'll go out of the money trying to be a day trader, but then let's say they don't get out. Now they're swinging out of the money, and those two don't go together.
And you're holding it for far too long, and that's what happens.
Yeah.
You got to learn that lesson.
Yeah.
You got to learn that lesson in the trading school. Is picking that proper strike price depending on what your trading plan is. And how far in the future you want to go out is all contingent on that trading plan in of itself. And if you don't follow it, you end up getting burnt.
Yeah, and I know like there's a lot of analyzers in the world. Like some of my students, I love them to death, but they're my analyzers. And so I want to say this too, like if you see a move happening and you want to take advantage of it, don't spend like all your time on the options chain because if the move is significant, most of the people on the chain are going to make money. So just get in the trade. It's not about the perfect strike. There is no perfect strike. But don't miss opportunities trying to pick the right contract. That's like
you want to get the direction right, the move right.
Yeah.
And the actual contract is a little less important. So that's good advice right there.
Yeah.
That's good advice.
Gems. Get them an opportunity to go ahead and write that one down right there.
Yeah.
Make sure you get the right direction. And I guess execution, I guess, would be the name of that game, is because especially in that scalping game, a matter of seconds, a matter of minutes can change everything. And so when you have that setup that you want, you got to execute, because if you don't, you're going to miss it.
Oh yeah, you have to. And that's a whole nother skill, to be honest. Like to be able to go into your brokerage, like usually I'll tell y'all my setup. Like when I'm trading, I'll have my brokerage open. Like I already know like where the price is. So I already have like a strike price in mind. And also like find your sweet spot. If you trade the same things over and over, you kind of know how the stocks move. Find your sweet spot on the options chain and just hammer that all the time. Like that's what I do. I don't really take my time to look up and down it. I just know I'm going 3 to 4 strikes out the money, like period. So that's my advice.
And I think that was my biggest my biggest level up was what you said right there. Finding those 1, 2, 3 stocks that I understand. I know how the price moves. I know how the options chains move.
Yeah.
So it takes away a lot of that other thinking you have to do when it's ready to execute. You know your levels on this stock in particular. You don't even really have to look at the chart itself today because you know the levels of the stock. So you can look at the price. Oh, it's at my whole number I've been waiting for 2 weeks. Now I know what to do with it.
You want to automate as much of it as you can.
I'm always using metaphors and examples of other stuff, like focusing on one person as opposed to getting to know 10 other people is a lot more difficult. Like, the tendencies of this one person, what, their triggers, what makes them tick. It's a lot easier to go ahead and know the characteristics of that one person as opposed to trying to entertain 10.
Can't do it. Can't do it effectively.
Nope.
Over the course of time, you end up getting burnt. Just like I said earlier. So
let's talk about implied volatility. Let's talk about that for a little bit.
It's almost like a party. Like if like I feel like volatility is basically like when the thrill is there, like everybody wants to be in that move, right? It's basically like the demand of the stock goes up, the volatility increases. When the demand goes down, the volatility comes down. Like if you look at like, I'm trying to think of an example, Nvidia or GameStop or AMC, like when all those things are getting like hammered by the bulls, those premiums, like why would I pay $6,000 for a GameStop call? That's IV. That's IV. Another interesting thing about IV is this, like there are certain parts of the day, like market open, where IV is high across the board. So if you're somebody, and it's like called, I believe, opening range trading. So like if you're someone who's trading the first 10 minutes of the market, I don't know how long it is. The opening bell, your premium, you're paying more for your premium. So if you're right, great. If you're wrong and you get faked out, you're probably going to spend the rest of the day trying to break even because you're going to get IV crushed out the gate. So that's another thing. I like to wait until like later on. It doesn't have to be the end of the day, but I do like to let those premiums get crushed out before I go in the morning to trade, especially on SPX, because those premiums are like disrespectful.
And that's another critical piece that you just talked about, is the actual rhythm of the market. The difference between open and close, and the difference is, per this conversation, how that affects volatility, how that affects your IV. And that also would affect when you're buying, when you're selling your options. As somebody who does hold overnight, when it's time to sell, that first 10 minutes in the morning, most times it's the best time for me to sell because the volatility is up. So therefore, that those prices are up from my thing that I swung overnight. But if I was purchasing an option at that point in time, then I would want to wait, like you say. So it's all about understanding that rhythm of the actual market itself, to get the best prices for you to make those moves that you're trying to make throughout the day.
Exactly. And you got to remember too, like when we're buying calls and puts, there's somebody on the other end selling it to us. So like if it doesn't make sense as a buyer, it's probably going to benefit the seller. So these super high IV or these super out of the money positions, like those are benefiting the seller. So just remember what you're doing. If you're, and I'm all for a pump and dump. Like I'm not saying, you know, I definitely got in on AMC. I'm not going to hold y'all, but I knew getting into it that I wasn't about to do this long term. I wasn't going to go to bed with that open. Like I knew I was there and I was gone. But a lot of people get in those IV positions that are ripping and they want to hold it and hit, you know, whatever. They want it to moon, but that's not the point. You want to get in and get out before that IV comes down.
That's one of the principles that I was taught. Know what you're going to do with the trade. Like know what your exit strategy is before you even get into that trade. And a lot of people don't do that. And like you said, they see it running and they, you know, that trade psychology goes completely out the window and you forcing stuff. Like, nah, stick to your plan.
I've learned too, like most traders, I don't want to say most traders, but a lot of even my mentees, when they came to me, like they didn't even have exit strategies. Like that was like new to them to have an exit strategy. I'm like, you don't get on a plane or in the car without a destination. Like you got to know where you're going with this.
And once again, it's execution, because you got to be prepared to take that loss at the stop loss. You've already pre-decided, and most people can't do that. They don't want to take that loss. They say, oh, I have hopium. If I give it a little more time, something will work out for me, and then that loss compounds itself. And so it's not even just having a strategy, it's executing that strategy when it's time to execute it.
Exactly. There's a huge disconnect there.
just lying to ourselves, telling ourselves lies, like, nah, it'll be all right. Nah, son.
I was telling you earlier, like most people like that take losses, like they literally know what they did wrong. They knew what they should have been doing, but there's a disconnect between what they're thinking and what they're doing. With like, it's crazy. People don't act in their best interest in the market. The emotions are strong. Like strong.
The rational mind turns to hope, and we all been there. We've all seen it happen. But over time, you got to learn these things and correct them. And as you said earlier, that journaling it, writing down, and being able to look at your mistakes, understand your mistakes, so you can improve every time is the best way I've seen to be able to correct that in your own in life, whether it's working out, whatever it is you want to do. Holding yourself accountable, looking back over the course of time is definitely the best way to get there, no matter what you want to do.
So we about to have a whole bunch of people cringe right now. All them folks that aren't your students that are out there making mistakes. What are some common? Because they about to look themselves in the mirror right now and be like, damn, I do that. Damn, I do that too. What are some common mistakes we see new traders doing when they get into the market, whether it's options or whatever?
Impulsive, not waiting on confirmation on their entries. Not getting out, not taking profit, which is crazy. I feel like that should be like rule number one. But yeah, not taking profit, over leveraging. I'll say that twice. Over leveraging, full porting. Why are we doing this? What else? Not using stop losses. Over trading. How much time we got? Like, no, I'm just kidding. But
I don't even think people realize they over trading when they're doing it. Like
they don't. Revenge trading, like connected trades. Like one trade, I lost $100, so I got to get it back out of this. Connecting them. Just not, like I said, just not moving. With not being objective, to what the market is doing, and just being like, let their ego is driving the car, and they're like, oh, and like I had someone the other day, they're like, oh, Nvidia has to come down, it's been running too hard. And I'm like, who are you to say that? Like Nvidia ran another 20 points the next day. But yeah, all that stuff. And that's like, it's human, I know, but we got to break through that stuff.
And a lot of times they don't even believe it. They heard it somewhere else. They hearing those lies, and then it gets embedded in their head, and they're like, oh yeah.
Full disclosure that Nvidia's run too far. That was me. The day before yesterday. But you gotta get in and get out. But that's it happens. That is the name of the game.
Yeah.
Because the per psychology. Sometimes the momentum's so strong, the feeling's so strong that what you chart out with all the indicators don't matter. Because in the reality of it, in that scenario, new news came out on top of the hottest story that was currently out.
Yeah.
And so whatever your chart say don't matter at that point in time, because that momentum is going to keep going the way it's going, because that the fire is there and people to get that. So it happens. You got to understand that. And when it happens, when it's not going your way, you have to have the ability to cut your loss and move on to the next trade.
Yeah, like sentiment is like a huge thing, is just understanding market sentiment and separating it from like your personal feelings. Because like to me, it's like when people try to time like the tops and bottoms of things, it reminds me of someone just like jumping on the freeway like with a stop sign. Like you're like you're going against the grain right now. But yeah, when it's time to reverse, wait on your confirmation, and then by all means take the other side. But we don't get to determine that. You know, the market has to decide that.
You got to play the game that's given to us. That's all it is.
Facts. So, you know, new trader coming in, making those mistakes. They say to themselves, "Nah, I need to go holler at Investing Bae, Options Bae. I'm gonna become a student of Alaina's." As someone who's purchased your course, benefited from the course, put other people on and sent them your way. You know, what is a new trader getting? Like kind of set up a scenario what it looks like when someone comes to you and you start to mentor them through this process.
And before she goes, she's gonna be real humble with it. So I'm gonna keep it real with you.
Nah,
For real. I've seen it. We talked about a trading journal. I know she has a great one of those. She's talked about her students a couple of times. As you said, the people that we know personally, loved ones, personal people that I wouldn't send to anybody that, you know, I wouldn't love and respect. I've seen go to Alaina's course, benefit from it. She does a great job, has built a great community over time. Like I said, I've watched the whole thing grow. And I appreciate it. And like I say, anybody out, she has also a lot of free material on the website for you. So it's not even necessarily just to come spend money type of thing. She really does care and wants to see everybody succeed. So you can go ahead, but like I say, don't.
No, I'm gonna give you really are my brother, dog. Because I knew she was gonna be humble. We was gonna do that.
I already know.
All right, yo.
I already know.
You just got it out the way.
I know her. Like but that's all a part of it. Is that she's a very genuine person. So there's no need to brag and boast, and most times those things, you know, will show themselves over time. And I'm just here to say I've witnessed that a lot of teaching that she does work. So you can go ahead.
Yeah, thank y'all. But yeah, I feel like our program is a little rigorous, but I think it helps people. Like I really do. Like we have some 7-figure students now, and it's just like, just, you know, you can come from
over that, dog. Don't gloss over that.
Yeah, you can come from anywhere, and like I almost feel like our program is kind of like a rehab. Like most people come to us from like other places, and they're just kind of like stuck in a rut, like on a hamster wheel, and not seeing progress. And so just being able to work with them, we can really get to know, like, what are you thinking? Like, how do you think? What's your reaction time like? Things like that. How do you react to losses? That's a big one, like how people react to their losses, because that be carrying over into a lot of things. But it's just cool because we can work with you and really get in your head and help you get back on track. But yeah, I don't know.
How does somebody find you? What's the best way to get in contact with you?
So we're at Investing Bae on all the socials, and then I'm probably most active on Twitter at @Nicole08. I'm just not a huge content person, so I'm gonna do better, I guess. But I suck at making content. But I'm on Twitter. I'm interactive. I'm not gonna ignore y'all. Like I love talking to people and getting to know everybody's stories and stuff.
So as I stated a second ago, if you are interested in learning options, the basics of options, looking for a community of people who are doing so, that's a great place to start, a great resource. Like I said, I've watched the community grow, and I know people who have benefited a lot from it. So
yeah, we'll keep it a buck. There's a lot of people out there that are posing as experts and taking advantage of folks out there. And a lot of people get a bad taste in their mouth and establish bad habits. So again, if you don't want to go through that and you want to get introduced to it the right way and do things on an up and up from the jump, holla at Alaina for sure.
Thank you all so much. And I was telling him too earlier, like, I appreciate you all too, because I've watched the growth here as well. So it's like a two-way street. And like Ben's was literally one of the first people I met on Clubhouse. So I was just like, it's like a full circle moment.
Yeah.
But I appreciate you guys so much.
Thank you. Well, I wish there nothing but more growth and success for you. And continue come ups and more big figure students and more big figures for yourself and your community, man. Keep it going.
Yeah, same to y'all. Let's get to
Appreciate it.
Mm-hmm. Yeah, we all coming up together. That's the beautiful thing. Like all these people that we reached out to on the podcast already. Like it's been a yes. Oh, I've been waiting for you. Like for real, people are getting offended. Like, oh, why you waiting until episode 7 and 8? Like I should have been number 1. Be like, no, my bad. Like, right. But again, that's just a testament of who we are as people and the kind of value and integrity we have as we sharing this gift. For it's like I look at the stock market as like a great equalizer, you know what I'm saying? Because you don't, unlike on a job where you gotta brown nose and get in with the right people to ascend up the corporate ladder or whatnot, like you don't have to do all that. You just gotta, what you get out of this is what you put into it. You put your head down, stick to the script, and just sharpen your sword like we were talking about earlier, and you'll get better and better, and you'll look back and like, damn, it's a beautiful thing.
Yeah, and like I said, I don't even know that there would be an Options Bae if it wasn't for y'all giving me a platform. So I very much appreciate y'all. Anything y'all ever need, like I got
the drive and the intellect you have, you would have figured something out one way or another. Trust me. But I will say that I do appreciate that and the platform that we had there. And like I said, we're trying to recreate something here with this new podcast and build another community here. So hopefully we can keep things going and keep the spirit going. And as you always know, if you need anything, we're here to help you out and your community out. So just let us know.
Yeah, the people need y'all. For real. I was so happy to see you guys back. I was like, starting my day with y'all every day. Like,
yeah,
there we go.
But all right, yeah. So y'all know where to find her. I think that'll wrap up episode 7. Since people tell me, oh man, y'all don't say what episode you on during the actual episode. This will be episode 7. All right.
There we go.
Extraordinary Exchange Podcast. We appreciate y'all. Again, you can find us on Instagram at Extraordinary Exchange Podcast and powered by the Extraordinary Investment Group, 12 Black men putting on the culture. Shout out to EBS, man. See, you got the EBS shirt.
There we go. We out here.
There we go. Solutions partners. I'm gonna just shout out this black brand right here. Black is love. Sure. Thank you, Mom, for raising black excellence. Just a random black owned apparel company that we supported along the lines. But yeah, we'll see y'all on the next episode. Alaina, thank you again.
Thank you.
Y'all be good.
Holla.
Peace.